So I recently just checked out my Robinhood portfolio after a really long time, and shit, the growth I've had over the past year is insane. I was calculating my net worth as I do twice every year. This is actually my first time calculating my net worth, but I am gonna do it twice every year, starting now. And I wanted to just share my Robinhood portfolio with you. This is just one part of my entire net worth, but I thought you guys would find it interesting, and I wanted to share everything I've learned, what I've done this past year, and all the knowledge I've gained over the several years of investing I've done, and share it with you guys. And also, maybe when I hit $100,000 in net worth, I'll share my entire financial journey with like a draw my life kind of thing. So you heard it here. I started investing in the stock market with individual stocks when I was 18. I had just graduated high school, was working a full-time job, internship, where I had some spare money left over, and I wanted to grow that without actually having to really work. So I picked up this book that was called The Little Book That Still Beats the Market by Joel Greenblatt, and basically it just went through his process for picking undervalued stocks. So what you do is you go through a company balance sheet, and based on the returns and growth of that company and where it's valued right now, you're able to identify undervalued stocks. And if I'm being honest, I read this book and I still didn't really know jack shit, because it takes so much time to go to these individual companies, research them. And even then, it's a risky move, because if you're investing in individual stocks, you're not diversifying across a bunch of things. The tricky thing about individual stocks is that you have all of your eggs in one basket. If it shoots up, that's awesome, you make a huge return, but if it drops, then you also make a very heavy loss. And basically the author had this website where he actually revealed some undervalued stocks. So I'd go to his website, put some things in the formula to what companies I wanted to actually buy, purchase them, and then just sit on them. These investments in individual stocks I usually held a little over a year or under a year, and that was it. I wasn't like day trading or anything like that. And I did decently. I want to say I actually gained a very slight amount of money through investing. And some people will trial investing, and like the 5-10 stocks they own do really well. But most of the time it's just like the entire market and economy has done well. And so these stocks, they appear to do well, but compared to like a broad index fund that encapsulates the entire market, it actually doesn't do as well. So to increase the knowledge of investing that I wanted to have, I learned from the best. I did a ton of research, watching videos, reading articles by Warren Buffett, Jack Bogle, J.L. Collins, and a bunch of other people who have reached financial independence. And the one thing in common that all of them recommend is to just put your money towards low-cost index funds. So you probably heard some of them, like the S&P 500, total US stock market, total international stock market, bonds, etc. And basically what these index funds do is they track an index. So instead of purchasing like a single stock, if you purchase the S&P 500, you're purchasing 500 US companies. And with the total US stock market index fund, you're purchasing a portion of every single US company, and therefore spreading all of your eggs in all baskets. This helps you diversify and take on way less risk than just investing in one stock. So I sold all of my individual stocks and bought index funds. And I purchased several different broad index funds. Some encapsulate the entire US market, some mid-cap stocks, some small stocks, and some sector ones, which sector ones aren't as diversified as like total US stock market index funds, but it's just something I wanted to play around with. And all of my current investments are 100% stocks. I'm 100% stocks because I'm investing for the long run. This is for my retirement, like years into the future. When I get closer and closer to retirement, I'll continuously add in more percentages of bonds. So actually last year, I didn't contribute any money into my Robinhood account. I was actually contributing money to my 401k and Roth IRA, my retirement accounts, and investing through that. But I did have money in my Robinhood account that I allocated into different investments, and I wanted to show you guys some of my investments in Robinhood without any additional contributions, just the growth over the past year. So I'm gonna go ahead and open up my Robinhood app, and this is my investments. Currently I have about $12,000 Over the past day, it went down 0.03%, but really I'm investing for the long term, and I really only change my stocks once every year. So the daily, day-to-day changes have no effect on me whatsoever. A week, month, 5% grew up. 3 months, it grew up 11.56. A year, it grew up 35.19%. Damn. But also you have to keep in mind that the market fluctuates, and this could very well have been at the start of my year could have started at a dip, pretty significant dip, and just ended on a high, and the market is at all-time highs right now. So you will continue to see the market go up and down, but what really matters is the average growth over the long term. And then all time, 25%. Wow, I actually have $200 just sitting in my Robinhood account. I should probably invest that. I am not a financial advisor or anything like that. I'm just a money nerd who likes researching personal finance, investing, and how to grow wealth. And all of these things that I'm gonna show you is just my preference and me playing and learning with investing. So just keep that in mind as I go through my investments. So here I have 9 shares of VTV. So VTV is the Vanguard Value ETF, and for those of you that don't know, an ETF is an exchange traded fund, and it's basically an index fund where you have to have enough money to purchase at least one stock of it. Wow, this actually did not do too great, well, recently, but what we care is about the long term. So 3 months grew about 8.79%, and the past year grew 22.61%. Wow, not bad. And this only makes up 9% of my portfolio. Next up I have VOO, which is the Vanguard S&P 500 ETF. It's a very solid one, and it has just the top 500 companies in the US. And in the past year, it grew 30.22%. That is a ridiculous percentage of growth. And this makes up only 10% of my portfolio. And then next I have VGT, which is the Vanguard Information Technology ETF. This is the sector ETF that I mentioned earlier. And I think I just bought this because I was going into the hype of technology, and technology is just booming right now. And I wanted to own a more specific index fund tailored to the technology industry. And so past 3 months grew 15%. And then in the past year, it grew 52.74%. Damn, that is insane. Just let me check out the past 5 years. 130.81%. Whoo! Damn, is it hot in here? Fuck, I'm getting hot. This is 40% of my portfolio. Yeesh. And lastly, I have Vanguard Mega Cap 300 Growth ETF. Just another index fund that's broad and contains multiple stocks. And in the past year, that grew 40%. But also keep in mind, the markets are at all-time highs. We are in an intense and a really long bull market, and everything has just been growing, which is just great in terms of investing. And also I'm gonna show you my biggest investing fail, and that is with cryptocurrency. I actually did purchase a percentage of Bitcoin, like right when it reached the top of like over $10,000 per Bitcoin. I really only put like 20 bucks into this, and eventually I didn't have enough money for the transaction to pull out the remaining money I had. So I have like 5 bucks still in Bitcoin. And I purchased Ethereum a while back. I purchased it when it was $567, and now it's $133. So I lost not a significant amount of money, but in terms of percentages, it's a lot. And this just shows that if you invest in something you don't understand, chances are you're just gonna get fucked. Excuse my French. So please, please, please educate yourself on investing, and don't invest in something you don't understand. It is just not worth the risk. I even watched part of the documentary on Netflix on cryptocurrency, and I still didn't know. I still didn't understand, like. So I only check my Robinhood portfolio very sparingly throughout the year, and about the time when 1 year hits on my investments, I'll take a look, and if the index funds I've invested in have actually declined, and I've lost money throughout that entire year, then I'll sell those a bit before the 1 year mark. And then if it has grown and I have made like capital gains, then I will sell after the 1 year mark of when I bought the index fund. So if you've actually made gains on your investments, you want to sell that after the 1 year mark because you're paying capital gains taxes, which is significantly lower than if you sell before that 1 year mark with the short-term capital gains, which is essentially just taxed as your regular income. This is important to do because you are taxed on your earnings of your investments. So if you wait like 10 years and if you hold this one stock for 10 years and say you make $10,000 over that 10 years, you're gonna have to pay capital gains tax on that $10,000 when you sell it all. But if you do this every single year, you're gonna pay capital gains taxes on the slight increase every single year, which is gonna be way lower in the long run. So sell your underperforming stocks before the 1 year mark and then sell your overperforming or highly performing stocks after that 1 year mark. And for those of you who are interested in getting started with investing, I'm gonna drop a referral link to Robinhood below. And if you use that link, you and I both get a free stock. Don't feel like you need a lot of money because you actually don't. Just start small. You can just have $100 and invest that into a couple stocks or index funds, I would recommend, and just like let that roll. Don't worry about how much money you've gained, like the dollar amount. Just look at the percentage, because as you put more and more money into that percentage is what's gonna dictate how much you grow. It's a clearer picture than just like the hard amount of money that you earn. So I hope you enjoyed me going through my Robinhood portfolio. Let me know anything else you want to see in the comments down below, and then be sure to stick around for next week. Peace.